Good afternoon, everyone, and welcome to the Daily Volatility Box Report for October 25th, 2019. We are TOSindicators.com, home of the Volatility Box. This is my third time trying to record now. PowerPoint has been crashing all two times so far. And so I'm going to try doing this the old school way with just some charts and the good old pen. So hopefully this ends up working. So first we'll cover the trade that may have set up depending on how aggressive you are looking to trade today in the bonds. We'll also cover what happened in the indices when we had news come out. And so we had this news hit the market right here. Around 8 a.m., let's say 8:20 a.m. Pacific, where we had news hit the market of U.S.-China close to finalizing some sections of the trade deal. Again, just emphasis on some of the words that I think add some BS to the story. And so then if we came back to the charts, we were looking on the indices in particular. And so we have our rule, which is whenever anything of that red folder important activity comes on Forex Factory, we switch on over to the conservative volatility box, and we were stocking entries, which didn't come on the S&P, which didn't come on the NASDAQ, which didn't come on the Dow, and which didn't come on the Russell. The bonds, however, did give you the entry, and now it sort of depends on how you ended up trading this. So I know a lot of folks just end up skipping the bonds altogether, especially since there's no micros. For us, yesterday we talked about something which is the idea of looking at the clouds as the entry, especially this week when we had noticed that the bonds had just a little bit more volatility than usual outside of the volatility box. So we talked about this in yesterday's video, which is looking at the clouds as the entry point, and this way you buy yourself that extra few ticks. And so if you had done that, then in this trade, your entry was right at the volatility box clouds. Your stop was well outside even this price action. Your stop was closer to down here, giving it that slightly extra room. And price ended up surviving, didn't really give you much of a profit, but you could have gotten out for break even. For us, bonds were not the trade we were looking at today of all days, especially on news events, especially after seeing that bonds have been the sole crutch of our week's losses. And so that should tell you something, just being observant in terms of which entries you're looking at. And next, we'll move on to the chart of Intel. So this was an earnings play that we talked about yesterday, and we had this on our website where we were looking for a gap and go. And if we pull this up on the website, we can see that we had Intel listed right here, where on Intel we were looking for a gap and go in the bullish direction if we had a beat. And the lowest move that we were looking to get was around $1.70. However, our average move was right near there, $1.73. And we had only had two instances of this. However, both instances were on beats, and both instances ended up working. And so that's where our focus was. So we had our open, which was a significant gap from yesterday's price action. And we were looking from the open for $1.70, which I believe came pretty soon. Yep, right by around 7 o'clock, you hit your first target, which is what our indicator tells us is your actual move. And so depending on how you manage your trades, how you decided to trade this, if you traded it with the actual stock, which gives you the greatest level of specificity, at least around your prices, especially after earnings when options pricing, in my opinion, is still adjusting. The IV is still adjusting in the options prices. You can actually play this using the actual stock. Of course, granted, that means that you might have to trade a few less shares, but it also gives you a way to play a smaller move and scale into this as if it were a micro contract, especially now that we're commission free. Anyway, so the $1.70 move was right here, and depending on how many shares or contracts you had, you could have taken all or some of your position off here and trailed the rest into the close. And to conclude today's video, we'll talk about a setup that came onto our radar today, and this is in corn. And so if you follow this website, which is a pretty decent website, it's called Crop Profit. In it, there was a post yesterday, actually, in which this specific author ended up talking about the October freeze and what that's done to the U.S. corn production. And he talks about how a freeze in the Midwestern parts is not really all that uncommon. However, what makes this particular sort of instance interesting, to say the least, is that there have already been greater delays in crop development for the year. And you can read this entire article. I'll link it in the Volatility Box Days report on the website. But really, this is to say something basic. If you boil it down to supply and demand for me, it's we're expecting to have less supply of corn, which to me would imply that demand would increase, or at least with supply going down, I'd expect price to start to rise up, even if it is to just start to make a slight move higher. And if we take the same transition and bring it to our charts, here we have the corn futures plotted, but you can also take a look at the corn ETF if you'd like. Really the same chart, but let's take a look at the futures chart. And we'll go ahead and add some of our free indicators on here just to make sure that our trade makes sense from not only that theme perspective that those of you that follow Ophir, you're probably used to hearing. It makes sense from the theme perspective in the sense of supply would be shorter because of a slower delay in crop development, fewer crops, weather delays start to come in, and weather damages start to come in, which just start to deplete acres on a whole. You would expect that price would start to go up, right? That's our theory. So we're looking if our indicators now can support this bullish decision, and if so, can we build a trade around this? And so the first thing that we'll want to do is make sure that the market is supporting some sort of a bullish conviction. And so we can use our market pulse indicator. And so if we bring that in, we can see that we are in a stage of acceleration if we look in the top left-hand corner. And we can also confirm that by seeing that we have a green variable moving average and price is consolidating near this moving average, right? And so to us, this is a green check mark. And we're looking for farther dated out options. And now if we load up our version of the V-score, we can see that we're very clearly right near the 0 standard deviation mark. And so a target that you might be looking at is really to see if you can make a move to the 1 standard deviation before you make a move to the -1 standard deviation. And you might be asking, okay, well, what's the price there? And so to figure that out, you can come into your option study menu, click the study settings for the V-score, change our label from, we'll see what the 1st standard deviation is first. And so we can see that price at the 1st standard deviation would be 414.16. And so that on the chart takes us to, let's say, right around right there. And now let's check what our standard deviation would be on the -1 scale. And there we can see that price is around 359.86. And so that means that our stop would be somewhere closer to down here. And that is essentially what your trade would be if you were looking to trade this with the actual futures. And if this is too large of a risk for you, you can come on over and do the same exercise on the corn ETF. So let's go ahead and do that. If we switch on over to the corn ETF, we see a very similar thing still in acceleration phase. Here, however, on the V-score, we see that we're near this -1 standard deviation. So we're going to do the same exercise. However, here it'll be 0 and it'll be -2 for the prices we're looking at. And so let's start with 0. And if we go and click 0, we can see that our first target would be near the 16 mark, which is right around here. And that makes sense, right? We would be filling this gap that we had previously made if price ended up making a move right up to there. And on the negative side, in terms of what our stop would be, we said that was a -2. And so if we hit -2, we can see that that price is closer to 14.43, which takes us to, let's say, right around there. And so now if I scroll a little bit forward, the trade that we actually have is you would be looking to enter right here with a stop near the 14.43 mark, and your target is closer to the 16 mark. 16.01 is what our V-score actually said. And that is a trade that we're looking at. And so bringing this into options, something that looks sort of interesting on the options chain is going into the February chain. We can take a look that there's some liquidity here. At least we start to see a bit more open interest. And the actual options that look a little bit more interesting are the 16 strike itself. And we can see that there's been at least some volume here, not significant today, but some volume, a decent amount of OI, and they're fairly cheap, 35 to 45 cent bid-ask spread. And if you went slightly deeper in the money with the Delta 60-ish option, then you're looking at the Delta 15, or sorry, the 15 strike, slightly more expensive, 70 cents to 80 cents, but cheap in the realm of options, especially with the 119 days. And another option, considering that corn is relatively cheap, is you could also use just the actual stock and trade 1518. This trades on the NASDAQ, so I believe it should be free under the new stock commission at TD Ameritrade. And so that might be a commission-free trade versus that 65-cent contract fee with options. Just something to think about. Hopefully this setup helps you. We hope you all have a wonderful weekend, and we'll see you in Monday's Nightly Update. Also, we're planning on recording our next tutorial video either this weekend or early next week, so stay tuned for that. Some exciting stuff coming ahead. This is the one made by a fellow subscriber, actually. All right, take care, everyone. Have a great weekend.